Hi, if you're watching this, then you're like us at Tech Cabal. You're curious about how technology is changing life and business in Africa. The nascent startup industry has grown into a full-blown tech revolution across the continent, creating new forms of work, new business winners, and new opportunities for anyone who is paying attention. As a new wave of innovation sweeps the continent, we're bringing you the key players, asking the hard questions, and giving you insights into how technology is changing Africa. From startups to big tech, to regulation and capital, we'll keep you abreast of everything you need to know to be a winner in this space. We hope that you are not only intrigued by what's happening in the present, but excited about the future. My name is Koro Mane Koroye, and this is the Next Wave Show by Tech Cabal. On the last episode, we discussed the survival story of bike hailing in Nigeria, highlighting the trajectory of startups in the industry and the role of regulation in shaping their operations. Today, we're talking about predatory lending in Africa. Across Africa, we've seen a number of lending platforms spring up with paperless, hence faster, discrete processes and simpler requirements. As a result, they've become the preferred option for accessing credit. However, some digital lenders have recently resorted to unscrupulous and predatory practices. Some lenders want to simply recoup their loans by all means necessary, while others are looking for exorbitant profits. We've had lenders deploy aggressive tactics to get people to take out loans they can't even afford. These lenders then go on to mass text and call people connected to their borrowers. Recently, a lender put out an obituary of a customer to scare them into paying back. These problematic tactics, plus unfair loan terms, high interest rates, and fees make up the problems surrounding predatory lending. In this episode, we're going to look at the genesis of the problem, its consequences, and a potential solution. Joining me to discuss this today are Dayo Ademola, Managing Director of Branch Nigeria, Hilda Mora, Founder and CEO of Kenya-based digital lending platform, Pezesha, and Barrister Emmanuel Edet, Assistant Director and Head of Legal Services and Board Matters at Nigeria's National Information Technology Development Agency. Welcome, Dayo, and it's great to have you.
Hi, KK. Thank you so much for having me.
So my first question is around the history of predatory lending in Africa, right? Especially looking at new startups coming into the space who are also kind of deploying these aggressive and predatory tactics.
Sure.
Can you walk us through the history and where it started from, really?
Sure. I think a good place to start is to realize that what's happening today and everything you're seeing today is simply the digitization of a centuries-old problem. The problem of unscrupulous money lenders, even call them loan sharks, goes back all the way back before biblical times, right? And this is a problem that has always been a global problem, but it's particularly prominent in parts of the world where the access to formal credit is very low and the barriers to getting, formal credit are extremely high. And so when you put all of those things together, you'll see that parts of Africa, parts of Southeast Asia are really a high stomping ground for these kinds of problems to thrive. And what's happening in Nigeria and in many parts of Africa in particular these days is if you take the age-old problem of loan sharks and unscrupulous money lenders, and you pair that with the fact that you can build an app and deploy an app from anywhere in the world and target any other part of the world very simply these days, then you see how there's, just a perfect storm for the kinds of problems that we're seeing today. The other side of that as well is you have collections agencies, because a lot of the time, these defaulted or delinquent loans are outsourced to collection agencies who then put all of this together, and they make their money by getting a percentage of the amount of money they're able to collect for the borrowers. So they are also incentivized to be unscrupulous and to try all kinds of tactics to get as much money repaid by delinquent customers as they possibly can. So when you put all of that stuff together, that's really what's going on today.
So now we understand the genesis of the problem, at least in some parts.
Right.
Okay, so let's bring it to where we are now, where one, there are customers taking out loans that they cannot pay back. And then on the other side, there are digital lenders who are upset that they're not receiving their money back, right? And especially with interest, which is very important to them.
Right.
What is a role that regulators can play in regulating digital lending companies but also sort of encouraging customers to not only take out loans they can pay back, but even to get on a payment plan that works for them.
Sure.
Yeah.
So before I get to talking about regulators or the government or what the government can do, I think there's also a lot of power in the hands of the users themselves, right? I think there's a lot for us to do to educate the users to realize who it is that they're engaging with. Who is this organization that's offering me loans, right? So if you take a look at Branch International, for example, which I run the Nigerian business for, we're regulated by the Central Bank of Nigeria. And that means that we have very strict guidelines on how we can interact with our users. It also just so happens that even before we were regulated by the CBN, we had a state money lender's license, which is what a lot of these sort of more unscrupulous apps, they also have sort of a state money lender's license and are not regulated by the central bank. We also happen to have just, as a global organization, made sure that we are NDPR compliant, which is the Nigeria Data Protection Regime, as well as GDPR compliant, which is the General Data Protection Regime, which is the DPR of the European Union. So holding ourselves to the highest standards to say that we will never use any data that we have access to contact people in your phone book, to speak to your relatives, to send you rude messages, all the kinds of stuff that you're seeing today. So I think it's also really important for the users themselves to be able to say, who are these guys regulated by? What are their practices? What are the interest rates that I'm being charged? What is my payment plan? And what happens in, the unfortunate case of me being delinquent? So that's one side of things. The other side of things as well is, again, because they're apps, I mean, you have these problems in even highly regulated environments like the US, for example. If you go back to the payday lender issues that happened in the US years ago and is still happening till today, you have all of these people flying under the radar, right? And they're making huge amounts of money targeting people, charging them, exorbitant interest rates for their particular environment and going about collecting back their delinquent loans in unscrupulous ways. So there's only so much the regulator can do. And you don't often see somebody in my position, praising the regulator, but the central bank actually has been doing a great job in trying to pull as many of these people into the regulatory space. And then you have other regulators like NITDA, and co, who occasionally go out and try to clean up and shut down, these unscrupulous apps. We saw that happen recently. But the issue there is, it's like you're playing whack-a-mole, right? For everyone that you killed, five more will pop up. And when you have desperate people operating in our type of economy, they'll get whatever they can from whomever they can as quickly as they can and think about how they're going to pay that back later. So I think the entire ecosystem has a job to do, to educate the users, to report unscrupulous behavior by these apps, report them to, if you're getting these messages on WhatsApp, report them to WhatsApp, make as many reports as you can to the Consumer Protection Association of Nigeria whenever you can, report them to the CBN whenever you can, and collectively we should be able to help sort of improve the environment as much as possible.
So we've talked about the problems, right? We've explored the ways in which regulators and even customers themselves can sort of get out of these relationships with predatory lenders. Are there any other solutions that we need to explore? Can you maybe speak specifically to how Branch International even handles educating consumers about loans and credit access as well?
Right. So for us, I'll answer another part of your question before I come to that. So for us, for example, with our outsourced collections agencies, right? So when you have loans that have been delinquent for more than 90 days, it's more efficient to outsource that to collections agencies to help you contact your customers and collect, right? The one thing we do, for example, is we never charge late fees. So it doesn't matter if you pay back, when you pay back your debt to us, we will never charge you late fees, because that's also one of the problems you see a lot in this space. I'm not able to pay you back the 10,000 naira I owe you right now. And a month from now, that debt is now 12,000 naira. A year from now, that debt is 30. It just keeps compounding.
Yeah.
And that makes it an even larger issue. So we, as of today, do not charge our customers late fees when they're not able to pay us back when they should. The other thing that we do is we're very strict with our partners, with the collections agencies that we work with. And we're very strict with the language that they're allowed to use to contact those customers. And we do monitor this by sort of mystery shopping. So for example, I'm listed every so often as a delinquent customer of branch so that my collections agencies can contact me and I can see what kind of language they're using to speak to our users, how often are you calling, are you being rude? And, every so often if we catch anything, I've had to fire some collections agencies because of repeated offenses in that regard. So that's what I, as an organization, I'm doing.
Yeah. Thank you so much for sharing these insights with us, Dio.
Thank you so much for having me.
Hi, Hilda. So among other things, Pesesha provides lending infrastructure and also alternative credit scoring solutions to lenders. What is the promise of good lending as you see it today?
Yeah, so the promise for digital lending is really still, one of those things that keeps some of us awake, really solving the hard problems in Pesesha of, basically providing working capital to SMEs. But really, what does that mean in the end? For us, this is about, driving meaningful financial inclusion for the SMEs that we work with. We're talking about, how do we help them to be productive? And what we've done, in terms of providing access to working capital is helping these SMEs to access credit, to be able to, finance their operations. So, and the way we do it at Pesesha is through embedded finance. And so there's a productive aspect in it where we know where the money is going and we know what it's being used for. Secondly, financial health. How do we make sure that the SMEs that we lend to, do not get over indebted? They don't over borrow and basically divert some of the money that we give them into consumption. And the way we've been able to do that, of course, as I mentioned, is we've partnered with big players in the market that have much more larger distributions and data to allow us to understand where is the money going, but also in the end, what it's being used for, and making sure that we can be able to assess the risk of the customer accurately. And then lastly, to define, what does the promise look like in terms of meaningful financial inclusion, is really financial welfare, helping these businesses to grow and also impact, their own communities and their own lives. Here I talk about the Matthew effect, people who have much more in terms of the advantage of accumulating wealth, definitely in the end have more to benefit compared to the low income who are actually the excluded guys that are being targeted by digital credit. And so, if you can be able to empower these low income people and allow them to be able to create more for themselves and create more wealth, in the end, I think that's what it really defines as a promise of meaningful financial inclusion.
Thank you so much for sharing that opinion with us, Hilda. Now we're going to go on a quick commercial break, and when we return, Tomiwa Aladekomo is going to continue the conversation with Hilda.
Welcome back, everyone, and thanks, Karamani, for taking the first part of this. Hi, Hilda, how are you? So, as we've seen in Kenya, when bad lenders proliferate, we can end up with a credit bubble and a lot of unsophisticated customers blacklisted from any future borrowing. Who are the key stakeholders that need to act to improve transparency, and what kind of actions do they need to take?
In the end, we all have a role to play. It's not going to be one stakeholder. It's going to be the consumer, it's going to be the lender, it's going to be the regulator, it's going to be the community. It's going to be, what I call like the beneficiaries of the credit, but also the partners that actually work with those people. Like for us, we work with SMEs, so we have a lot of partners that also have a responsibility to play. But let me talk about, the center of this whole relationship, and how do we sanitize? How do we sanitize digital lending? It goes back to the regulation. It goes back to the regulator. And what do they need to do to make sure that they harmonize these best practices? They harmonize because, if you remember what I mentioned earlier about, how do I define the promise, which is just three things: financial stability, financial health, and financial wealth. And how do we then achieve that? It starts with, sanitization, which is where the regulator is sitting. And so, in Kenya, for example, currently we have new digital lending laws, which the regulator has been very aggressive in terms of making sure that they bring this sanity. As you know, there's a well of lenders, and every other month there's a new digital lender coming in the space. And so they want to make sure that, the consumer is protected. So it's the digital lenders have been given up to September this year to comply and get the license. And this is part of the harmonization and making sure that, the consumer is protected, but also making sure that there's improved transparency as well in what the digital lenders are doing. Now, that said, there's need to make sure that innovation is not stifled, because you and I will agree that, fintechs and digital lending has for sure created impact in making sure the excluded population, especially where traditional players have not been able to reach, to be able to access credit for the first time ever. For most of these players, which are targeting low-income borrowers, they have been able to go to the root on the ground to really educate and bring this low income to be part of the formal financial system. In all honesty, like here in Kenya, I don't know about other countries, but I would believe it's the same across many African countries, that the credit bureaus are very fragmented. The data that sits there, it's really very siloed. And so they don't have one source of truth. They're not sharing data. They're not speaking to each other. So if you're sitting where we are sitting as Pesesha, and we want to give credit to an SME, and we go and check one credit bureau, credit bureau X, and then we go to the next credit bureau, a completely different story. In fact, in most cases, the data doesn't exist. So what I'm saying here is the credit bureaus have also not fulfilled the full mandate of what they're meant to be doing, which is providing one source of truth. So we, as digital lending platforms and infrastructures like ourselves, have had to start building that one source of truth from scratch, which is painful, but it's what it is. Until the regulation also comes and sanitize, it's going to take some time to build this history. So we've had to do it ourselves because the credit bureaus are not doing it. Lastly, mobile providers and digital lenders, they need to work together. I know there is the argument of if I work with my competitor, they would be stealing my customers, quote unquote. These are banks talking to fintechs talking to each other. But look, in the end, it's a big market. Everyone, has a share, and it's a massive opportunity. If we are just talking about SME lending, where we play as Pesesha, we're talking of more than $300 billion financing gap across sub-Saharan Africa. If we go down to the individuals, it's massive. Now, if we're all going to be competing and not solving the actual problem of information asymmetry, then we're all going to, end up, closing shop and going back to where we came from. Now, the secret here is, if we collaborate and start working together, what that means is we start sharing data, we start sharing, the different practices. We start making sure that, each of our value proposition, is very clear. And then in the end, we are not going to see the default rates we are seeing in the market.
All right. So welcome, Barrister Emmanuel. On the regulation front, we've seen forceful action from Nigeria's National Information Technology Development Agency, NITDA, such as the shutdown of 6 illegal loan companies and collaboration with the Federal Competition and Consumer Protection Commission, FCCPC. Can you tell us, Barrister Emmanuel, how else the agency is tackling data privacy abuse by lending operators? What proactive steps is the government taking? And why is it crucial to tackle these practices through a combined approach like you've done with the FCCPC?
All right. Thank you very much for having me here. And also thank you very much for the issues you have raised. We have seen a surge of people trying as much as possible to get money from these lenders and at the same time giving consent to the lenders through the various applications that will enable these lenders have access to their contacts and also share information with those who are contained in their contact. I don't think what we did in collaboration with the Federal Competition and Consumer Protection Commission was high-handed. There is a need for us to protect the interest of Nigerians who actually use these apps. And one of the ways we do that is by providing information and educating people on how they are supposed to use these applications. First of all, people need to know that your personal data is very important. It's all about you. It's what identifies you as a human being. And in a digital economy, that's the tool of your trade, is essentially what makes you who you are online. And so protecting your personal information is of paramount importance in any transaction you're having. And that's why we have the Nigerian Data Protection Regulation, which basically provides a framework for protection of personal data. So we are also ensuring that every agency, company also has a privacy policy which identifies to consumers or whoever is using those particular policies or who is using those particular apps, things that they do with your personal information. So it's also important for people to read and understand what your personal information is being used for whenever you are having a transaction with an online platform or engaging in goods, trading goods and services. Apart from that, we have taken proactive steps also to ensure that an agency is established specifically for the purpose of taking care of data protection. I'm sure you may be aware that the government recently set up the National Data Protection Bureau. This emphasizes the government's desire to ensure that we have standard practices in our country, Nigeria, in such a manner that we can do international trade. Of course, you know about the African Free Trade Continental Zone coming up in the next few years. We are going to have a free trade zone throughout the entire African continent. It's important that as data travels across, your personal data travels across these countries, they are adequately protected. Also, it is better to over-regulate than under-regulate. In the world we have now, in the digital economy space, there are bloodlines between regulatory scopes and regulatory jurisdiction. For example, there is a consumer protection issue that has to do with predatory lending. There is also a data protection issue that has to do with predatory lending. There are also financial crime issues that have to do with predatory lending. And so it's always good for regulatory agencies to collaborate in such a manner that every space is covered and people are protected. This is what government is advocating, that all regulatory agencies that cover a particular space should come together to ensure that regulation covers every area and protect the citizens of Nigeria.
So thank you for clarifying that. In 2021, the head of corporate affairs at the agency said that NIDDA had received over 40 petitions from members of the public on data abuse by lending companies. But article after article in business and technology publications have shown how prevalent this kind of predatory lending is and how devastating its impact can be for consumers. What are the precautionary measures that consumers can take in order to avoid falling victim?
Avoiding practices that may harm your personal data is very important. People don't know the value of their personal data, and that's where we come in with a lot of capacity building, a lot of awareness programs, a lot of collaboration with diverse agencies, community-based organizations, non-governmental organizations, to try and ensure that people actually understand what they do with their personal data. For example, most of us just sign up to programs online. You sign up, you download free software, you go on a website and they ask you, do you accept the cookies? You click accept all cookies and all those kind of things. We need to be aware that the only thing that stops someone from stealing your identity is if you are aware that you even have an identity online, which is very, very important for every consumer. Before you sign up for any program, especially programs online, find out how those people manage your data, how those people behind those programs manage your data. The NDPR, that's the Nigerian Data Protection Regulation, makes provisions to ensure that every organization that collects personal data actually publish a privacy information to people who want to use their website to ensure that everything they do concerning the person's data is in an open manner.
And that's it. We've come to the end of today's episode. Thank you so much, Dayo, Hilda, and Barrister Emmanuel for your time on the show today. Also, thank you to everyone who's taken time out to watch today's edition of The Next Wave. Remember, you can tweet at us using the hashtag #TheNextWaveCNBC. You can also send in your feedback on the episode and questions for us to thenextwave@techcabal.com. Thank you again, everyone. We appreciate your presence with us. See you next time.